What's going on, YouTube? Welcome back to our Texas real estate and construction channel. And we have, for the second time, talking a bit about a different topic, but a really interesting guest who's going to be talking about how to invest remotely in multifamily. He has some pretty cool services to offer and really just a lot of neat concepts that I think will be very beneficial in this quote unquote new economy, right? So we're facing supply chain, we're facing inflation, we're facing a changing market, right? So we're going into the end of 2022, going into 2023 with a lot of questions. And I really believe that this guest, Terry Murphy, we have Terry, who's going to explain to us some really neat concepts. How you doing today, Terry?
I'm doing fantastic, Aaron. It's good talking with you again, man.
Yeah, absolutely. And sorry, I didn't mention he is with Remote Multifamily Investing Academy, where they, show you different tactics and strategies to be able to operate in this market. So I know that's a light intro, Terry. For those of us who aren't too familiar with you, would you introduce yourself, please?
Yeah, sure. So I, as you mentioned, I work with Remote Multifamily Investing Academy. Founders of that are Jen and Stacy, who have been investing in multifamily for almost 20 years now. So they've got a ton of experience. And the reason for their journey down the remote path was because they started out investing in Southern California, which obviously is an expensive market and doesn't make a whole lot of sense to buy and hold there. So they have, over the last 20 years, really developed a super strategic, very to the point, concise, step-by-step model to follow that they still follow themselves to this day when they enter new markets, and that they share with their students too. So we're really helping people expand their investing reach and getting out, especially if they're in those expensive markets, and finding other markets that have not only cash flow benefits, but also appreciation benefits long-term as well.
Absolutely. And I know you mentioned how, you said they originated in Southern California, right?
That's correct. Yes. Yes.
Okay. Yeah, no, I'm just curious as well. And you mentioned something about buy and hold not being a good strategy. Could you kind of elaborate on that and explain to us, in terms when you're looking to do real estate deals, why would buy and hold be off the table?
Well, especially for, like, say, the Southern California or any market that's similar to that, it's just a low cap rate market. And, the real estate there is expensive, and you're probably going to see cap rates in the 2-3 range because, when it costs $1 million to buy a duplex and you're only getting $2,000 or $3,000 of income from rents, it doesn't make sense. Even if you're able to leverage, if you are, then you're in general upside down. And that's just a terrible return. I mean, there are some people, of course, that want to invest for appreciation, long-term, et cetera, and they don't mind an upside down note. That's not, income. That's not what we're about. We want cash flow right up front, off the bat, whether we're doing BRRRR strategy, doing a fix and not flip, but fixing cash out refi, and or stabilized turnkey properties that we're targeting. Either way, we want cash flow right from the start so that we're making money and building our portfolio moving forward. But we also want to be in a market that we've researched and know that the population is steady holding or increasing, and it's business friendly. The states are landlord friendly. And then we want to get in the path of progress even. So we'll go so far as to call county commissioner's office and other, city planning departments to find out where revitalization efforts are being focused, so that we can get into the path of those progress. And when you combine a BRRRR strategy of multifamily with that, well, it's what we call a millionaire maker, because it only takes a couple of those to really change your life.
Absolutely. And, you mentioned an interesting word there was revitalization, right? Maybe talking to the city. Could you, expand more on what revitalization means for the city and how that can help you make smart investment decisions?
Yeah, sure. So obviously these real estate cycles occur everywhere, but not everywhere is on the same cycle. So what we want to do is narrow down an MSA, or, a metropolitan area, identify what its population trends are, also what they're doing in terms of local municipalities, in terms of businesses and attracting businesses to come in that create new jobs. But in terms of the revitalization, it's gentrification of certain areas. We want to know where the city is going to be putting tax dollars to work to improve the, certain areas of any given city. Whether it's a downtown area or if they're going to be doing park improvements, whatever the case may be, infrastructure improvements, beautification. Those areas tend to experience a lot of appreciation quickly over time once those efforts are put into place, once that kind of work is done. But it's easy to find out beforehand by simply contacting that municipality's city planning department and asking them, hey, what's the plan here? What kind of infrastructure and beautification type projects are you guys supporting? And find out exactly where you want to focus your efforts in terms of, acquisition.
Absolutely. And, at least here in Houston, I can only speak for Houston, but there, I guess what we call opportunity zones or different places where, maybe the city is encouraging, developers or builders to build in a certain area, or maybe other private capital groups are coming into Houston and, dumping a bunch of money into the market. So it's neat to observe that and kind of follow those trends and then, act accordingly, right? Maybe figure that into your investing strategy.
Yes, it's very, very powerful. I can give you a for instance here. Jen and Stacy entered, and I don't know if I introduced Jen and Stacy before, but they are the founders of Remote Multifamily Investing Academy, and they're Jen and Stacy Conkey, and they started investing in Indianapolis. Actually, they moved into Texas in 2018, which was perfect timing because Texas has seen a lot of appreciation and a lot of increase in market value in real estate over the last 4 years. But they did the same thing in Indianapolis. They picked up a duplex for, I believe it was around $29,000, put $30,000 into it. It was a burr, cashed out refi, pulled most of their capital back out so they could go do it again. And here this year, that same duplex, their duplex appraised for almost $200,000. So you can see where 3, 4, 5 of these, and yeah, that's why I mentioned, we call it the millionaire maker. Getting the path of progress, doing those burrs, holding for the right amount of time. And it doesn't take too many to really change a person's financial future.
Absolutely. And I think that it's interesting to hear that sort of story. And I know you mentioned 2 different states, California, Indiana, right? So Southern California and Indianapolis are coming down here to Texas. I think a big concern, whether, an investor is in Texas or really anywhere in the country, is putting their money in a market that they're not familiar with. That can be very nerve-wracking, right? It's, sending your money halfway across the country to a building you've never touched, a place you've never been, but having that sort of faith in the person that you're working with is going to pull through for you. Could you kind of talk about, maybe those sorts of concerns that an investor could have investing remotely?
Yes, yeah, absolutely. And that is everybody's knee-jerk reaction. You mean I can't touch it, I can't see it, I can't taste it, I can't buy it. But that's not exactly, and that's kind of what we always need to address up front, because it has to really take a mindset shift in order to really take advantage of this new virtual investing model. But the key is really emphasized by not only Jen and Stacy, but the key to it overall is building the right team, getting the right team of professionals to help you make good, solid acquisitions and build your portfolio. And then also, of course, manage that portfolio for you, because that's the only thing that's going to lead to not just financial freedom and not just time freedom, but also location freedom. And the great part about that is, and the great part about Jen and Stacy's overall strategy is that it's very scalable. You don't have to duplicate your own hours to add 10 doors, 100 doors, or like Jen and Stacy did last year, adding 967 doors to their portfolio, all without syndication. So that's really the most amazing part about the strategy overall, is how repeatable it is and how scalable it is.
Yeah, and it's funny you mentioned the word scalability. I know that's a big concern for people, and not to rag on flippers or construction, but I know that that's a concern that flippers and builders that I know here in Houston, that's always kind of their concern. They're deal by deal, right? So you put money in, you flip the house, you put money in, you build the house, and you sell. It's on to the next one. Whereas for you in this business model, what you're proposing here, it's interesting how it has that scalability like you talked about.
Yes, absolutely. And when it comes down to it, that's the only thing that really does offer the time freedom aspect or component of what basically higher income leads to. I mean, if you're working all the time to make a lot of money, great, but what's the point? you're working all the time. So you don't even get to enjoy it. So what we want to do is make a lot of money and also still have the time to enjoy that and spend with our family and give back to our communities, because those are all very important factors as well. And this is why Jen and Stacy have been able to not only start their own academy here, but also homeschool their 4 children, take, as frequent RV vacations as they want, because that's their passion. And the same with, the entire teams here, everybody that's built portfolios. We like to get together for what we call quarterly intensives. They're amazing events that are open to our students. We're going on a Caribbean cruise next time, so it's going to be a lot of fun. It's also going to be super great for not only education and knowledge gaining for the students that come, but also networking. Because honestly, everybody that comes through our, Jen and Stacy's program, we operate and assume that they are going to be professional investors moving forward for life. So these are people you definitely want to network with. You definitely want to keep them in your Rolodex, although I haven't seen a Rolodex in probably 15 years. But, you definitely want to maintain those connections, because this is where your joint venture partners are going to come from. And heck, one day, if you do want to get into syndication, it's a great place to raise funds and have connections where you just call them up and say, hey, are you looking for something?
Absolutely. And that's some great insight there as well. And I really think that what people can, relate to and really want is kind of that time freedom, right? So you said they have the ability to run their business, homeschool their children while also being on the move and traveling at their leisure. So it's really interesting to hear people who are doing that, right? People who have a lot of kids and are able to make a living and travel and do all these things. In a sense, it almost sounds too good to be true,
Really, yeah, I can understand why you would say that, Aaron, but the fact is that if you set it up correctly and you get the right players on your team, and you make all the right moves, setting all of that up, it's absolutely possible. I mean, there's living proof. Not only that, I mean, one of our students, it was Teresa, just signed a lease while she was riding on the back of a Harley. We've got that kind of technology these days. Is the only point there. But we had another student actually close on a deal because they were able to sign while they were out on a sailboat on, I think it was Lake Michigan or something like that. That my point being is you can be anywhere and close on a deal halfway across the country.
Yeah, absolutely. And, I'm, just curious as well, maybe, you're on the back of that Harley, right? You're on your phone, maybe you're signing a document, but I guess beforehand, are you, what are a few things that people would need to know, maybe bits of information, whether a multifamily deal is good or not to invest in remotely?
Yeah, well, there are definitely some numbers and simple calculations that you want to look at in terms of knowing whether or not a property is a good deal. Is that what you're asking
Yes,
specifically about?
like if, I guess distinguishing between a good and a bad deal.
Okay, yeah, gotcha. So you definitely have to protect yourself, and especially when you're not there to go through a place on your own. You need to have the professionals there ready to go when you get a deal, so that you can get the right information, so that you're making the correct decisions based on accurate and quality data, facts, statistics, etc., numbers, basically. So you want to make sure that you are getting very, very good and high quality, retail values. If you're doing BRRRRs, you want to make sure that your after repair values are accurate. They have to be accurate. These are the biggest mess ups for new investors, generally speaking, is blowing an ARV estimate or blowing a repair estimate on something along the lines of either a fix and flip or a BRRRR. Those are super, super important numbers to get correctly. But then you also want to look at your cap rates and your DSCRs, your debt service coverage ratios, to make sure that those numbers look good. But the biggest one really is your cash on cash return. Real estate's awesome because you can leverage it. It's a hard asset that you can leverage, meaning you can borrow money from other people to buy it. That reduces how much money you have to bring to the table. And in general, that increases your cash on cash return and allows you to do more deals. So you can get your capital working for you. And if you need to, joint venture with people that need to get their capital working so that you can bring on more funds and do more deals well beyond your own resources. I like to see 50% cash on cash return. I think it's entirely possible. Some people, they're cool with 8 to 10, 12%, say cash on cash return. If they're buying a stabilized property that's turnkey, they don't have to do anything but sign the deed closing documents and they're done.
Mhm.
But, those of us that maybe want to do a burr or want to get into something that has a better return, it's not impossible to go after that 30, 40, 50% cash on cash return level.
Absolutely. And that's some great insight there, talking about maybe the percentages, that cash on cash return, right? Putting your money in, getting your money out, and that would be your return. Could you explain or maybe tell us what's what's a good dollar amount to get per month, right? So if I'm investing in these multifamily deals per month, how much could I earn per month passively doing this remotely?
Well, one thing you really need to consider right now, Aaron, and that's a great question. But one thing you definitely have to consider is the environment we're in, economically speaking. We're in an environment where the Fed's raising interest rates. And usually what that's going to do is increase holding costs because the money that we borrow to get into these deals gets more expensive. So it's going to take a little bit of catch up for the market to really feel all those ripple effects all the way through it. Some sellers are probably going to have to understand that they're not going to get what they would have gotten maybe back in January, February this year. Things have changed significantly. But just in terms of how much maybe like per door you can earn, national average is on, say, commercial buildings of 5 or more units, $100 to $150 a door. That's, I would consider, bare minimum, or otherwise not even look at it. However, you might want to be flexible with that while we're going through this turbulent time of increasing interest rates. But on the 2 to 4 unit space, $250 a door is pretty reasonable. One of our students just closed and is getting $571 per door on a duplex. So she just bought a duplex that's going to be putting an extra $1,100 in her pocket every single month net. That's what's left over for her after paying all the expenses and everything on the management and holding the property.
Absolutely. No, and that's I know that's a big question that people would have, right? So you're putting in the time and the effort and obviously your money in as well. Really just wanting to see, maybe I work a 9 to 5 and I'm putting in all that effort there. I know that I'm gonna make, I don't know, 7 or 8 grand a month. And then on top of that, I'd like to know what else would I make passively, right?
Mm-hmm, mm-hmm. Yeah, and one of our big things is, especially when we have new students come on board, the ones that are aspiring to invest, they haven't yet maybe done a deal, but they want to get that first deal done. We want to help them get to that point as quickly as possible. It's part of Jen and Stacy's strategy because what we've always noticed with our students is after that first deal is closed, then deal 2, 3, 4, 5 are just like back to back. It's amazing how that works. But what we really want to do is find out how much it costs to be them. How much does it cost to be you every month? Your financial independence number. And what we're going to try to do and what we want to shoot for is getting a portfolio built that actually matches what maybe they're making with their W-2, or at the very minimum exceeds what their every month bills are. Whether, you've got to include the expenses that you have monthly for that. But, that's pretty typical: mortgage, car payments, revolving debt, credit cards, maybe any standing debt that you have that you need to pay, groceries, utilities, gas, etc. Add all that up. We want to be able to bring in enough money from a portfolio to cover that, so that if you decide to wake up one day and call your boss up and just say, "Hey, I'm not coming back to work," well, you have that option.
Yeah. Yep. No, absolutely. And that's some great insight there. And it's neat to kind of, hear a bit about more of the services you guys offer. Are there any last words you could give us, or maybe anything you haven't said you really just like to hit home for us?
I think that when you bring everything all together, what it really looks like to be a professional investor, from what not only from what Jen and Stacy teach, but from what I've picked up over the last almost 20 years since I started flipping houses here in Central Texas in 2003. I got to a point where I was doing between 8 and 10 renovations at a time, which was hellish on time, and it was really a hamster wheel. So I'm so happy that I got out of that single family fix and flip model. But what that professional investor really looks like is, hey, we want to do things in a good order so that we can strip away the noise and make sure that we're moving forward and doing the highest value activities that an investor should be doing at any given moment in time. And what we do to really assess that is get to know people and build a relationship so that we know exactly what they need to support them on their journey towards getting that portfolio of their dreams that pays for their lifestyle and gives them total time freedom. But ideally, once that first deal is under contract, what we do then is form a business entity, say your LLC, limited liability company. And then you put your deed for your property that you're closing on in that LLC. And then what I like to do as a core component is, fund an infinite banking plan, because that's, it's not tax now, it's not tax later, it's tax never. And that's where I want to be with profits that you're gaining from real estate. So take the cash flow from your real estate investor, your real estate investments, your acquisition, your holdings, and then use your LLC as the policy owner for your infinite bank so that you can take those proceeds from your rents and income to pay for your infinite bank premiums that you're putting into and building that cash value so that you can write them off. So it's equivalent to what a 401k does in terms of, it's pre-tax money when you invest in it. So then you've got a complete plan working for you. You've got acquisitions, you've got protection from litigation to some degree with your limited liability company, asset protection, the tax pass-through entity, and then also writing off what you're putting as your profits into your IBC, your infinite banking plan. And then you also have the depreciation on your properties as well. So you're really at that juncture playing the game like it's built. That's all we can do. Most of us, we don't get to write the rules. We just play by them. And that's playing at a very, very high level. And what I would like to say to everybody that's watching and that's interested in this sort of thing, Jen and Stacy also have a Facebook group, and we'd love for anyone that's interested to join us there. They like to give away some of their trainings for free to new members. A big one that we start with is the 5 pillars to a multi-million-dollar portfolio, which really kind of teaches you the basics and the foundation of what you need to build a multifamily real estate investment business. And then also, Jen and Stacy do a free weekly training, and we'd love to invite anybody and everybody that wants to come to that. They hold them Wednesday, 6 p.m. Eastern time, 5 p.m. Central, 3 p.m. for those guys that are out on the West Coast. But it's every week. It's free. We will love people to show up. They teach a topic on the multifamily investing and acquisition side. Then they open it up for Q&A. So if you have anything blocking you from getting that next deal or finding the next deal or building your business, anything at all related to real estate investing, whether it's multifamily or single family, Jen and Stacy have done it all. Anything under the sun you could think of. They've done the driving for dollars. They've done the bandit signs. They've done the yellow letters. They've done the postcards. They've done the skip tracing, the cold calling, the door knocking, all that. We just got rid of it. It's like, that sucks. We want to maximize our time. We want to leverage relationships and build networks. And we want to be able to analyze as many deals as we possibly can, because making offers is the highest value activity a real estate investor should be doing. And you, as a CEO of your business, that's the activity you need to be doing and focusing on. Let the star players on your team handle everything else. Then you're delegating, you're winning that way, so that you're actually doing the things you need to do as CEO, and then you are at a point that's very scalable. So, that's kind of like what I'd, I guess, like to finish off with there, Aaron. But another thing is, we just had a Get Fundable webinar with Merrill Chandler, the guys over at Get Fundable, where they teach people how to take their business entity and build it properly so that they are a fundable entity moving forward. And it might just be very mind-blowing to most people what the factors are that are actually important in doing that. Like, if you formed an LLC that has something like real estate or capital or resources or those type of words in the name, you're not fundable. You're blacklisted. I don't know if a lot of people understand or know that yet, but we have a great affiliate relationship with those guys over there. It's definitely something that you want to, make sure that you've got on your radar as well, so that you're funding or building a fundable entity from the get-go, because that's super important to get those $100,000, $200,000, $300,000, $400,000, $500,000 credit lines. It takes a process, and you just have to be very specific with it from the very beginning, out of the gates. But we want to help people holistically, not just about lead gen, not just about, but the whole thing, making sure that people are building a business that can support them for the rest of their life and leave legacies to their family.
Sure, absolutely. And there's some great insight there really on kind of that scalability aspect, right? You talking about all those common ways that people can, try to get business, and really just kind of making that tailor-made solution to help people, with their business. So I think that's so great.
Yeah, I appreciate it. I think it's the only way, because I know there's no shortage of people that are teaching real estate out there, but most of them just have cookie cutter plans. Like
Yeah.
everybody fits, like one size fits all. And that's not the way it is. That's just not life. Everybody starts from somewhere different. Everybody has different resources, different needs. So it really is powerful. And that's why we have a 98% win rate when it comes to our students getting their first deal in under 90 days. And we're very proud of that. And we want to continue with that. So, that's like our first goal out of the gates, is getting that first deal done. And we want to make sure that anybody that's actually willing to invest in their education, which is very powerful and people should be doing, making sure they're doing it correctly from the get-go, avoiding expensive mistakes, because you're going to learn one way or another, and it's going to cost you one way or another, whether it's through education, which is generally the cheaper route, because life, it teaches hard lessons. And I've learned a couple the hard way myself. And I really wish, going back, if I had a way to avoid them, if I could do it over, I would do it over.
Yep, absolutely. There's definitely a lot to be said for that, right? And Terry, maybe someone's listening to you, maybe they're down here in the state of Texas, another part of the country, or they just want to connect with you. We're going to have the link to your group in the show notes, but where can we find you? How can we talk to you?
Well, I try to make contact with anybody that comes into our Facebook group, try to make it same day. So that's a great place to connect. I use Facebook Messenger a lot. One thing I could do is I could give you my personal Messenger link. So all you have to do when you're on the computer is click on that link, it'll open up a messenger string directly to me. And all you got to do is say, hey, I'm interested, or, what information, or I want to do this or whatever, make an intro, and I'll be happy to help as best I can.
Easy enough.
That's what we're here for. So I'll drop that in the chat for you. If you want to include that as well, Aaron, that'd be fantastic.
Yes, sir. We'll be sure to do that, Terry. It's been a real neat conversation with you. Always a good time. It's been interesting kind of hearing more, a little bit about your background, I guess, in the real estate business, multifamily, being able to, to really scale and build that business that people are craving, while also, being able to remotely invest, whether you're in an RV, on the back of a Harley, wherever you may be. It's been a pleasure having you on the show tonight.
Yeah, man. And I love Texas, born and raised here. Investing has been always great in the past, but it's gotten so competitive. When you can open up the whole country to be your investing playground, it's super powerful. But yeah, I appreciate you having me here. Always a pleasure, Aaron. If you ever have any other questions or anything you'd like to address with me, I'm more than happy to do it.
Absolutely, Terry. Thank you so much.
All right, man. Take care.